I was reading your commentary on the survey, and you're saying that central banks still see gold as an important asset, but its role has changed. What do you mean by that? What's the latest finding that you've discovered in this year's gold survey?
Sure. So just a little bit of background about the survey itself. This is the third year we've done this survey, and we received 51 responses out of about 150 central banks we contacted. It's actually the highest response rate we've ever gotten on this survey. So
Wow.
specifically about how we think the role of gold might be changing in central bankers' minds is there was a question basically asking central bankers to talk about the relevance of certain factors for why they decided to invest in gold. And we ran this question, basically every year we've done this survey. So just like the last few years, the top two factors were gold's historical position and gold as a long-term store of value. That didn't really change, but
Mhm.
the similarities really ended there. The third most relevant factor ranked by central banks was gold's performance during times of crisis. And that's up from fifth place from last year's survey. And actually, 79% of central banks said that this was a relevant factor for why they invested in gold versus just 59% in last year's survey. So I think that the impact of COVID, the financial fallout, has definitely been planted in the minds of a lot of central bank reserve managers, and that's probably why they rated gold's performance during times of crisis as much more relevant this year. It's not just that, though. There are a bunch of other factors in the survey which all have seen a big uplift in their relevance, including gold's lack of default risk, its diversification benefits, its liquidity, all up about 15 to 20 percentage points higher in terms of relevancy this year compared to last year. So I think all these factors combined are making central banks think about what is the role of gold in their portfolios? What is the most optimal balance for different assets in their reserve portfolios as we go into this uncertain period?
But it doesn't seem like gold right now is a priority. It seems like more like, so I'm sort of wondering, like, how do you think this unfolds post crisis? Like right now, it's really about keeping the economy, keeping the wheels turning. So I'm sort of wondering. I mean, do you see central banks just continuing to go into gold even this year?
So I think they are throwing everything they can to keep their economies functioning, but of course that's the monetary policy function of central banking. I think the survey that we ran specifically focuses on the reserve asset management function of central banking. So how they plan to invest their foreign currency in gold reserves to achieve whatever goals they're trying to achieve. I think that they will continue to be buyers of gold. Our view is that central banks overall will still be net buyers of gold, probably not the same total quantity of gold as we've seen in previous years. Of course, 2018 and 2019 were record years already, but they will continue to be net buyers for sure. And one thing that the survey points to potentially is that we'll see more and more countries buying gold. So more new central banks entering the gold market, hopefully, and increasing the diversity of which countries are buying gold.
One of the things you just mentioned is the size of the allocation. What do you think that is? I mean, especially a lot of emerging market central banks, they have very low gold reserves compared to regular reserves. I mean, what do you think that magic number is?
There's no one magic number for any central bank. They all have different criteria that they're evaluating with. They face different circumstances in their economies, for instance, their broader external environment. You're right about emerging market central banks. They typically have about 5%, even lower, as a percent of total reserves for gold. Whereas the advanced economies, Western Europe, the US, they have north of 60, 70%. But they come from two very different historical legacies when it comes to gold. So I think that there's no magic number per se, but certainly every central bank is always reevaluating what the optimal balance of reserve assets is. And we think that gold plays an important role in that optimal balance for almost every central bank.
And what does this, I guess, continued, being net buyers? What's this support mean for the gold market sort of moving forward, do you think?
I think it's an important stamp of I think it's an important sign that there's a major part of the international financial system that continues to see gold as an important an asset class that's relevant for their reserve management. And I think it just means that gold overall will still be and continue to be a very relevant part of the international financial system.
Just look at, gold versus US dollar. I mean, do you think, with central banks have been net buyers of gold for the last 10 years. And in fact, in the 2019 report, central bank buying over the last 10 years has surpassed the selling of the previous 10 years. So I'm sort of wondering, like, does gold surpass, or does gold um, take over as a reserve currency, do you think? I mean, is faith, does this mean faith is being lost in the US dollar, or do they really work together?
Probably not take over. I think the dollar is still going to be, probably the most dominant reserve currency for the time being, for sure. In fact, we even asked this question in the survey. We asked central bankers to say, where do you see the dollar, the euro, the RMB, and gold as a proportion of total reserves in about 5 years' time?
Mhm.
And most respondents do think that gold will grow as a total proportion of reserves overall. They also think the RMB is going to grow, albeit from a very low base right now for the RMB. For the dollar and the euro, they were resoundingly mixed, I have to say. There was no strong inkling one way or the other. Some portion thought that the dollar would decline as a portion of total reserves. Others think it'll rise, and big chunk think it'll stay pretty much where it is. So there's no real consensus. But I do think that going forward, central bankers do view gold as a much more important part of the international financial system and an important part of their reserve assets overall. Certainly, the dollar, in terms of the impact of monetary policy by the Fed, will be a part of that. But also, in some corners of the world, there is increasing worry about weaponization of the dollar, politicization of the dollar, and therefore they'll be looking at how to balance the reserve assets in light of that.
I always like to ask this from researchers. What was the big surprise factor? Was there one thing that really stood out at you in this year's survey?
I'd like to say that it was the headline result that 20% of central banks say that they'll be adding gold this year, compared to just 8% last year. And last year was already a record-breaking year for total purchases. But I think what actually stood out to me in the survey is we asked a question about what factors are important for you for your overall investing. So not just gold, but your overall reserve investing. And 88% of central bankers said that negative interest rates was a relevant factor, by far the most relevant factor out of all the choices we had for that question. Now, as you and I know, negative or low interest rates, they're going to be around for a long time, for the foreseeable future. And I think that for central banks especially, you'll have to recall that their investment universe is much more limited compared to an institutional investor. For the most part, they can't invest in equities. They're stuck with highly rated sovereign bonds. And those sovereign bonds are going to be disproportionately affected by low and negative rates going forward. Now, that, of course, is going to make life harder for a lot of reserve managers as they try to balance safety, liquidity, and return. But it also is going to make gold more attractive, relatively speaking. So I think that that's going to be an important train of thought for a lot of reserve managers going forward.
Do you think that translates into the retail sector? In hedge funds and also retail investors?
So I think for an ordinary mom and pop investor, they will be thinking about, I think they'll be thinking about the economic fallout of COVID first, of course, and how to, balance their household checkbook, how to make sure they have enough income to stay afloat. But beyond that, they will be thinking about what is going to be the financial impact of all this stimulus. And remember, it's not just monetary stimulus in terms of asset buying by the Federal Reserve or other central banks. It's also the fiscal side of the stimulus as well. So governments potentially going into much higher amounts of debt to be able to cut checks to everybody. Will that lead to inflation? I think is going to be a key question on a lot of people's minds. So, and if that's going to be the case, how do I rearrange my portfolio to protect against the downside of that, or maybe even to capitalize on that? So that's going to be important for mom and pop investors, important for institutional investors, and important for central bank reserve managers as well.
Thank you very much, Shaokai Fan, for sharing your thoughts on central bank gold demand and the trends that the World Gold Council is watching.
My pleasure. Thank you.